and evening to all of you, and thank you for joining our second State of the Investment Climate by Government of Bangladesh. My name is Ashik Chowdhury, currently working closely with my colleagues in the Investment Development Authority and the Economic Zone Authority as Executive Chairman. Today, we have a very special guest, Dr. Ahsan H. Mansur, an economist and the 13th Governor of Bangladesh Bank. Welcome, sir, and thank you for accepting our invite.
Thank you. You're most welcome.
Like last time, we will split the session into two. In part one, we will be sharing key initiatives where we are working on to improving the investment climate. And in part two, Dr. Mansur will be answering your questions that you have already sent via the link, or you can still ask using the chat button. You may not be we may not be able to answer all of your questions, but we'll try our best and probably send some of the later answers to you directly via your email. So let's jump right into the presentation. Assuming you can see my screen. Okay, so I just wanted to revisit the rationale and the purpose of this webinar. We wanted to give you a platform to ask questions and share information and stay honest to our promises. Nearly 2 months into this role, I've spoken to hundreds of CEOs, entrepreneurs, and partners and asked them the same questions, the two questions. What challenges are you facing and how can we help? We had also requested to send them to us an order of priority. The priority they would like us to work on, assuming that we are an interim government and we have a finite time frame to get these things done. So we took the list and summarized them, and here's the final version. Quality of government services, which includes OSS or one-stop service, or the lack of it. There isn't enough collaboration between private and public sector. We keep on changing the rules of the game in the middle of the game and create utter confusion. Access to resources, be it gas, electricity, or labor, and finally, corruption, which I don't think I need to explain and talk about it further. All these combined have resulted into what you see on the right-hand side. In 2024, the total FDI was only $4 billion. Less than $1 billion was what I would call high-quality capital, equity capital. So the question really is, what actions are we going to take to make it better? Here's the list. It's broken out by completion quarters. So some of the Q2 next year ones, we have probably kicked off, but will take 6 months to complete. The greens are the ones we have already ticked off. And here are some photos of the green ones we have ticked off. The communication platform, the GOB coordination committee, project ambassador. So here's a list, here's a video, here's a photo of some of our multinational CEOs, and actually they combine in combination the biggest FDI for our country in last 50 years. So they visited our boss in a meet and greet event in his residence, and jokes apart, I must admit that the homework they have given to us has caused us sleepless nights. So the other photo I'd really like to show you is a meeting from today. An inter-authority, inter-ministerial coordination meeting on investment facilitation was held at the Chief Advisor's office. It was decided at an earlier meeting, chaired by Chief Advisor himself, that a monthly forum of heads of investment promotion wings and key ministerial units will convene to track progress in improving the investor experience. Chaired by Special Envoy Lutfi Siddiqui, this forum takes a whole of government approach to the journey of an investor to facilitate smooth execution and in a time-bound manner and within existing laws and regulations. A secondary objective is to recommend changes to laws and regulations where required. So a great example of that is Project Ambassador. We recently did an experiment with the government. Pace of execution has always been flagged as a problem within government machinery. So as a test case, a separate SWAT team was set up in BIDA to identify key challenges Young One Group has faced and to try to resolve them. We called it Project Ambassador, as we must convert our critics to ambassador to win in FDI space. And today, we actually held a governing body meeting chaired by Chief Advisor, where all key issues that were flagged by Young One Group were discussed and executive decisions were taken in favor of them to make sure that we convert them into an ambassador. Another ambassador on our side is Stephen Kobos. So shout out to our friend Stephen from Accelerate Energy. His mention on Bangladesh in an earnings call was very heartwarming. So thank you, Stephen. I'm going to go back to the list one more time for you to have a quick look. And obviously, we're going to share this list with all of you. This presentation will be made available in LinkedIn. So please feel free to download it, hold us accountable to ensure that we are keeping our promise about executing all these initiatives. The initiatives, as you can see, range from co-location of agencies into BIDA, which is an interministerial exercise, to some strategic exercise like port strategy, down to an institutional exercises within BIDA and BEZA, where we are trying to make these agencies one of the best agencies in Bangladesh and hopefully at some point in time across the region. Now, as we transition into the questions for our special guest, I do want to cover one more item, which is In Focus Bangladesh Bank. I've had a lot of experience in dealing with Bangladesh Bank or interacting with them while in banking. And now that I'm part of government, we try to collaborate with them and see if we can unlock some of the challenges investors typically raise or face with central bank issues. So a meeting took place, chaired by actually Honorable Governor, on specific issues related to foreign currency loan. If you look at the table on the left-hand side, this is from the Be Ready Index produced by World Bank. And it clearly shows you that Bangladesh lags far behind in terms of time it takes to get a loan in this country. So we really looked at the time piece and tried to find ways to make it faster. So the actions that were agreed and taken where that loan application and interest rate hedge applications are going to be clubbed so that they can be approved faster. All types of loan applications are now centralized, and therefore, whether it's coming from OBU or an offshore, or it's coming into EZ, EPZ, or non-earmarked areas, they're all in the same place. So the pace of execution will be far more seamless, and the committee that's looking at it are also going to be far more experienced in making sure or understanding what needs to be done with these loans. There are Bangladesh Bank officials who are currently co-located in BIDA office. They're still part of Bangladesh Bank, but they sit with us and they are experts in solving investor issues. They have been given expanded authority and some of new authorities so that some of the applications that come to them can be very quickly resolved and turned back. And the last point that got agreed was that the capital machinery usage terms have been expanded to 3 years. This is a draconian issue that we had in the banking system. So you have capital machineries that come to Bangladesh, and the only time they have to turn it into a long-term loan was originally only a year. Obviously, majority of the industries require more than a year to construct, and therefore we've now expanded it to 3 years, after which it can be converted into a long-term loan. So thank you to the Honorable Governor for actually being progressive about these issues, and we hope to make some significant changes down the line with the same authority. That's the end of my presentation. And we will, as I said, we will share this for you to keep it in your back pocket and ask us questions in future if we have lived up to the mark. But let's maybe just switch gears and move on to the second part of our episode today, which is with the governor of Bangladesh Bank. And I'm going to start with some of the questions that I've already received from you via the link. So maybe let me start with that. Stop sharing. Thank you again, sir, for coming. So maybe I'll start with a very topical and timely question, which is, how does the central bank plan to address the concerns raised by Moody's in its recent downgrade and enhance investor confidence?
Thank you, and let me welcome investors or potential investors or those who are interested in Bangladesh. All of you, welcome to this session. Well, let me tell you, I mean, Bangladesh government, this government is coming out of a crisis situation. We have what we call, in some sense, very perfect storm that we have to overcome. On the one hand, we had the balance of payment problem. We started with that. We had a reserve declining. We had depreciating exchange rate. Also, the deficit in the balance of payment was significantly negative in almost all criteria, be it current account, be it financial account, or overall deficit. On the domestic front, the import inflation rate was very high. And then, to make it even worse, there was a systematic robbing of banks, which made many banks, or I would say at least 8 or 10 banks, vulnerable to potential. So these are the initial conditions, and this didn't happen overnight. The thing that we would like to draw to your attention is that this is not a downgrade that should have happened now. The whole thing happened before this government came to power, or this economy is in the current state. When this downgrading was announced, by that time, for example, on the BOP side, the exchange rate has been stabilized. It has been stable for the last 4 months and very much stable. Secondly, because we are not selling any dollars, the foreign exchange reserve position is also very stable. And so the decline in reserves have been fully arrested. Third, overall balance of payment side, which is the main concern, this reserve level, this stability of exchange rate, and the third factor is the overall balance of payment indicators. The balance of the current account. It was a large deficit. It is now virtual balance. It was financial account was also in large deficit, more than about $1.5 billion. Now it is 500, 600 billion surplus financial account. Third, the overall deficit is still slightly deficit, primarily because of deficit that was incurred. I'm talking about the fiscal year, which is partly in the previous regime, is still in deficit, but it has improved by more than $1 billion. So what we wanted to point out to Moody's is that you have announced a downgrade at a time when things where outlook is improving, and you are saying that your outlook has declined, deteriorated. That is what our objection to this assessment by Moody's, and we protested it. We made a formal note of dissent. The timing, and basically saying that you have been driving the vehicle while looking at the rear view mirror and not looking front. You should be, while setting your outlook, you should be looking in the front view of the car, not in the rear view mirror for long. Because what you are reporting is something that happened in the past, but things are changing and significantly improved on the external side, which is their prime concern. So that will be my initial reaction to Moody's downgrade. And we think that inflation concern is also being addressed. Monetary policy has been significantly tightened, well beyond what was called for in the IMF program. And IMF will concede that point that yes, we're going or multi-step ahead of what they have been asking. We have increased the policy rate significantly. We have so monetary interest rates are already liberalized, and interest rates have gone up significantly. So that's why giving support to the dollar. The taka is a very attractive asset now. The return on taka is like 12, 13, 14%. And so it's much above the US dollar return on the US dollar you can get. And the stability of the exchange rate has turned it around. And that's why we're seeing this positive inflow on the financial account. So we wanted to deliberately make monetary policy very tight. We deliberately wanted to make taka attractive as an asset class and make exchange rate stable there through that. And stability of the exchange rate is the cornerstone or going to underpin this future decline in inflation in Bangladesh. So what we have done for reducing inflation? We have tightened the monetary policy, as I said. We have stabilized the exchange rate, so there will be very little. World commodity prices are also very stable or declining, if any. So there will be no negative shock coming from external side. So we have neutralized that through exchange rate stability, and the outlook on the commodity market side is very, very comfortable. Petroleum prices have declined, food prices in general is lower than it used to be. So we feel very comfortable that inflation is going to come down in the coming months. In addition to that, we also undertake a lot of demand side measures. We undertook a coordination with the fiscal side, and basically with coordination with the fiscal policy, reduce the government borrowing from the banking system so that more credit can be made available for the private sector to regenerate supply. We have noticed this, for example, raw material import settlement, LC, or raw material import, which have been settled in the last 4 months, is 10% above the last year. And last year it was minus 15%. So think about this turnaround. And what is Moody's telling the story? Moody's story is completely outdated and not up to date. That's why I told in that commentary to Moody's that please come, visit Bangladesh, make your assessment. Don't sit in Singapore, listen to narratives from somewhere else, and write your story. You will be behind the curve. That will be my response. So I think we are making significant progress on the macroeconomic front. We will come out of these 3 challenges that I mentioned upfront, and the new outlook should reflect that. So I would stop at this.
Thank you, sir. And you talked about the tightening. So maybe I just do a follow-up question on that, which is, how long do you foresee this tightening to continue in the short or medium run? Are we talking about months? Are we talking about years? What's your general view or feel at this moment?
We have studied the monetary tightening experience in the post-COVID period for most of the central banks, US, UK, India, Thailand, and several other East Asian countries. What we have noticed is that once the tightening starts, say from when the inflation is 10% or more, you start the tightening. By the time inflation rate comes down to 3% or 2%, depending on their target area and the speed of tightening, it normally takes 12 months to 18 months. That's the experience that I have seen. I plotted them and looked at it. So in our case, what should I expect? Given the relative stability of the exchange rate, given that this monetary tightening started in the month of May, I would say by May, June, it will be 12 months. I would think that by May, June, we should have inflation coming down to 7%, and perhaps in another few months, it will be to 6 or 5%. So when that happens, we will certainly, once halfway through that, we're not at a pause. We're not going to tighten in monetary policy any further. We're waiting to see the signals of the market. If the inflation doesn't go up significantly in the coming months, we will remain on the pause mode. But my expectation is that in 2 months' time, or even 1 month's time, we should start seeing headline inflation coming down. Let me also take note of this. The non-food inflation is already down for the third consecutive month. It was first came down the month of August, then it came down in September, then it came down in October, modestly, but it came down steadily. So what I'm telling is that things are working. The reason the food inflation is high is because we had 2 floods, and we also had very long rainy season, which prevented the winter crops and winter vegetables and many other things, agriculture products to come to the market, like onions, like potatoes, like winter vegetables and so on. So food prices are on the decline now, and it will be, I would say, some of these will be collapsing in the next 2 months because there will be so much potatoes coming in the market in 2 months' time that potatoes will be rotting in the field, or that is my preliminary prediction. There is not going to be 80, but it will be 20 taka. So this is how the agricultural crop cycles work, and unfortunately for farmers, they will not get the money next time. So, but anyway, and the other thing I must say that the rural economy is getting the benefit of high prices. They're getting the highest price of for paddy. They're getting the highest price for potatoes. Any crop that they have now in this scarce time, they're getting good return. They're very happy. Of course, the consumers are. I hope this complaint will also be over in about 5-6 months' time. At that time, we will be unwinding this tightening monetary stance. We will bring down the interest rate along with the decline in inflation, and we hope that that external sector will also stabilize. I must make 2 points here. On the external side, these 2 factors are working in our favor. Despite all the noises you hear about unrest, industrial unrest in the garment sector, RMG sector, and so on, our export, which is 86% RMG driven, increased by 10% in the last 4 months. So that's one thing you must take note of. Despite all this revolution, all the disturbances of industrial unrest, exports are growing. In the month of October, the exports grew by 20 percentage point, 20%. That is a huge boost to our balance of payment. If you look at remittance, that is up by 28.5% in the last 5 months, up to end of November, from July to November, 28.5%. So we are getting a turnaround. We are seeing a turnaround in the balance of payment situation, and we hope the supply side, external constraint imposed by the balance of payment problem is being relieved. People can open LCs now. Yes, we have reduced the outstanding payment arrears, accumulated LCs open but not settled, from 2.5 billion to 454 million. And that is, why is this 454 million? Because they are not normal payment delays. They are mostly payment delays related to companies like Salom Group, companies which are not properly operating, like Simco Group and so on and so forth. So they account for a large part of that. And there is some also unpaid things with the power sector. So we are working on making this remaining external payment areas come zero, and hopefully we should be able to do it in a month or so.
Thank you, sir. And just I guess slightly a follow-up as well on this. So the inflation, as you have been trying to tackle it, is very commendable, and a lot of people consider the tightening of inflationary policies as a contradictory measure for economic growth. So how do you see that? How does Bangladesh Bank navigate or keep the balance between inflationary policies to tighten them, at the same time not make sure that it doesn't stifle economic growth?
Let me emphasize one thing. Yes, we have increased the interest rate. We know that it hurts the business in some way, but our statistics is very clear. When Bangladesh Bank or the previous government kept the interest rate fixed at 9% maximum, did they get investment in Bangladesh? Answer is no. When was the best time for inflation? investment in Bangladesh, it was in 2014, 15, 16, 17, when interest rates were 16, 17 or 15% level. Lending rate I'm talking about. So it is not the interest rate that is the single largest deterrent for investment in Bangladesh. In Bangladesh, there are many other non-economic factors which Mr. Ashik Chowdhury, you are dealing yourself. You know it better than me. That there are many numerous non-economic factors that needs to be addressed, and those are more important factors than the financing cost. But nevertheless, I'm aware, and I only let me tell you, in terms of the growth, we are very much confident, and everybody, World Bank, IMF, ADB, everybody is saying interest growth will be at least 4.5 to 5%. So it is not a small growth also. It's a moderate growth in the context of Bangladesh because we are used to having 6.5% as one. But 4.5% under this kind of situation, I'm happy with that growth. And with that growth, with the balance of payment problem easing, I'm looking for a very strong rebound in the next fiscal year. And that's what is the lasting impact on our economy and our employment generation. And I hope that business community will understand that, investors will accept this explanation and give us the time for our economic policies to muddle through this system and give us the desired results.
Thank you, sir. And you talked about employment, so maybe we slightly switch gears to that. So one of the questions I have here, it says the SME financing gap is estimated to be USD 2.8 billion in Bangladesh. Why does the banking sector continue to have such a conservative lending practice?
This is the unfortunate part of our banking sector performance, I would say. It has been largely urban-centric in the past, and largely a large part of it, not the, for example, Black Bank. When I was the chairman of Black Bank, it was 36% SME lending. It was still a SME-dominated bank. It increased to 54% when I left. The share of SMEs in the portfolio of the Black Bank. But that is not the standard case. Many banks, particularly the foreign banks, for example, they don't even touch the SMEs. They don't want to go into that sector. They prefer trade. So unfortunately, still the preference is for trade and industrial investments, and there's a problem. With respect to industrial investment is the mismatch of assets and liabilities, because you have deposits which are short term. We are blending very long term, 7, 8, 10 years, 15 years. And that is not a congenial thing. We didn't have to develop the bond market for long-term financing. So it is all financing is being done by the banking system. And a part of the problem of the banking system is because that we are too dependent on debt financing rather than equity financing. So this is an issue. This is a medium-term issue that we also need to address, but that's also an issue. So we hope that these problems will muddle through that and work out.
Okay, thank you, sir. Next question. What key steps is Bangladesh Bank taking to restore trust in the Bangladesh banking system?
Well, first of all, the first and foremost is to improve the governance of the banks. There were a number of banks which were badly governed, and in that process, it was controlled by families, single family controlling about 7 banks and 3 non-financial institutions, which is completely against the law, against the rules of Bangladesh Bank, but it happened. They did it to the political support and blindly not looking at as a blind person, not looking at the rules of the books of Bangladesh Bank. So that time is over. So governance is improved. That's the first thing that we have done. Secondly, we have created 3 task forces. One is looking at the asset quality and undertaking an asset quality review. This is being conducted with support from World Bank and Asian Development Bank. This asset quality review of these banks is going to start in early December, in a week's time. And that will be followed by asset recovery as well, which is being undertaken by another task force. And another, we have a third task force which will be looking at strengthening the operations of Bangladesh Bank. We will be focusing more on compliance, inspection, supervision, and the regulatory issues and enforcement. So that way, we believe that the banking sector will be tracking. Yes, we have some serious issue of recapitalizing some of these banks, but we don't believe that's going to be a systemic problem. It is a problem that we can contain, and it is only limited to Islamic banks. The largest Islamic bank has grown out of the liquidity pressure, and for the other banks, we are supporting them with liquidity support, and we hope many of them will come out through that process. But at the end of the day, we are undertaking also regulatory legal reform for Bank Resolution Act, which is now almost complete and reviewed by the World Bank and IMF. And once that review is complete, we will submit it for adoption, and that will give us a lot of flexibility in terms of resolving the issues related to the big banks. So it will be costly. It will take its time, but we will definitely want to leave behind much stronger banking system, much more accountable banking system, much more regulation-wise compliant banking system for the coming years.
Thank you, sir. And maybe if we have time for one more question, what is Bangladesh Bank's, and this is a good question to probably try to tie the knot, which is, what is Bangladesh Bank's plan or vision to facilitate the inbound investors? Or the question can be rephrased to say, what is Bangladesh Bank's plan or vision to facilitate increase in FDI into Bangladesh?
Thank you. I think we are, as Dr. Ashik Chowdhury said, that BIDA is making good efforts to ease the investment problems, and Bangladesh Bank is part of it. Bangladesh Bank has already used regulatory things. Like, for example, this is a small example, but let me mention. If you want to repatriate your profits or dividends or royalties, you don't anymore need permission from Bangladesh Bank. We have taken our hands off. We basically told that there are rules and regulations. The AD banks, they have the authority to remit any amount of money following the rules. So it is left to the banking system. Based on client relationship, bank client relationship, you will remit money. What we're trying to do is that any sanctioning of hard loans, we are easing it up. OBU operations of the banks, we are easing it up. Between OBU and DBU fund transfers, we have already take out the restrictions. We are trying to promote investment. Any investment proposal coming to us, which are from credible sources, we are approving it right away. We have also authorized agreed with BIDA that small loans and things like that can be processed there. They don't even need to come to the investment company. So we need to simplify these things. We want to liberalize our capital transactions process, investment regime, and the best thing that we can help the investor is by building up our macroeconomic our ensuring our macroeconomic stability, continued macro stability, higher growth, and reserve build-up. Those will give the assurances of profitability and profit repatriation. From investment perspective, these are important considerations, and Bangladesh Bank fully understands the concerns of investors. They are fully committed to their problems to be solved and eased so that they can happily do business in Bangladesh.
Thank you. Thank you, sir. Thank you, ladies and gentlemen. We've just run out of time, but what we will do, as we have done before, we will send you the answers to the questions that you have asked online or during the session via email. And thank you for joining us again, sir. That was very kind of you. In a month's time, we will hopefully host another one where we will have another distinguished guest joining us and talking about investment climate. And we hope to see you all again. Thank you very much. Good night.
Thank you all. Good night.